I'd like to welcome everybody. Good morning. Thanks for joining me. This has been weeks, if not months, in the making. It's been a lot of prep time, a lot of trading, a lot of rolling up the sleeves in the trenches to get this going, but really, really glad we're here. We got A Beach, Anil, Anthony, Antonio, Anwar, Austin, BM, Barry, Benjamin, Bradley, Brian's got a bunch of Brian's. Burzen's here. Welcome, Burzen. I'm going to add you to the panelist. Um, Catalan's here. Charlie, Christian, Curtis, Dale. We've got Dan, Benjamin, Daniel, Davin, bunch of Davins, Davids, bunch of Davids, bunch of Dennises. Good morning, Eds, Dougs, Felix, Franks, Gary, George, Gerald, Gordon. Hey, Gordon. Greg, Hamid, Herberts, James, Jeff, Jess. Hey, Jim. Jim Pickus. Good morning, sir. John, Jose. Good morning, Richard. We had a lot of people here. Too many names to go alphabetically as everybody keeps coming in here. My intentions were honest, but we got a lot of people. So just welcome everybody. Kenneth is on a cruise ship in Mexico. Why don't you stop in over on the West Coast in Mazatlan and I'll take you out for some ceviche? I'm over on the West Coast. I'm in Mazatlan, Mexico myself. Sinaloa, actually. Everybody says it's dangerous here, but I don't know. Chicago's a hell of a lot more dangerous than here. Okay, so this is the first time I've taught what we're about to teach. Uh, and we are going to go over a lot of stuff. First and foremost, we don't trade the first 15 minutes. So if you're wondering why I'm not even looking at the markets, because I really don't care what just happened in the first 3 minutes of the open. It is nothing but noise. We released the HATT 2.0 because we found ways to make this trading system a whole lot better. And it wasn't just about the signals that we were trading, it was the time frame rotations, it was the understanding when and where and how to align the correlation and just knowing what to do. And yesterday, when I did the presentation, we talked about alignment. We're going to spend a lot of time on rules today. I think without rules, you're a duck in the water, and we're gonna get into this quickly. So hopefully we can take some trades and we can ultimately be efficient with our time. Obviously, we are recording this, and it is available to every one of you. For those of you that are in the ATS program, you're going to really value the discretionary rules around this. For those of you that are in the AQS program, you're definitely going to value the foundation around turning the algos on and off. And ultimately, the biggest aspect is stop placement. Where do you place your stops on the signals? We're going to talk about that today. It just has a lot to do with just how you trade the timeframes that you trade, which timeframes you're trading, and understanding the volatility around each signal should be a big part of the discussion. Because we are going to be looking at trading, and I may play some trades debate depending on how the markets play out. The disclaimer is really important. So if everybody could do me a favor, read this, understand it, and accept it. Type a Y in the chat box that you agree to the risk disclaimer so that we can move forward like professional traders in here and we understand the business. That's great. Okay, great. All right, let's do this. All right. I'd like to make the screen a little bit bigger. I have an ultra wide monitor, but I don't want to make it too big. Okay. Is that okay for everybody? This is a little bit bigger than a normal screen, but I want to make it wide enough so that everybody can see the screens. Yes? Would Do you think I could make it wider or do you think it's too much? Should I make it smaller? Because I have an ultra wide, so I can go as wide as you want to make it a little bit wider. You guys good with that? Just a little bit wider? How's that? Like this? Would that be better? Just a little bit more screen real estate? How's that? Perfect, guys. Good. Okay, perfect. I just think it's best like because everybody has different monitors, etc. Okay. So a couple things I want to talk about is when I trade this strategy, I can trade it essentially on a few different time frames. What we're going to do is we're going to talk about those time frames first and foremost. And let's do this. Okay. So first of all, these rotations are non-negotiable. Don't try to change them. Don't try to, right? Don't try to do this 5 minute and 1 minute. Okay. Then you've got 3 minute and That's the wrong way to do it. Let's do this. We'll go higher time frame first. 5 minute and 1 minute. Okay. So then we're going to go 15 minute and 3 minute. Then we're going to go 5 minute and 30 minute. Then we're going to go, let me see here. I just want to make sure I give you the right information that I have written down. I'm going to do this here. And we're going to go 15 minute and 1 hour. Okay. And then we're going to go 1 hour and 4 hour. And then we're going to go 4 hour and daily. And I don't think anybody's trading on the daily and weekly, so that's fine. So what I teach you today can be applied to every single rotation that I've just put here. So let's define these. Scalping, okay? Day trading, intraday swing, okay? Same. These are intraday swing trades. These could be intraday. These could be intraday or swing, depending on the, right? Depending on the, these are swing trades. Does everybody understand that? So let me explain something. What we're going to do is we're not going to scalp until you're good. Scalping is not easy. Scalping is hard on the brain. Scalping is hard on the cognitive function. Everybody thinks they want to be a scalper because they don't want to be in the market for long periods of time. But the amount of trades that you have to take or the amount of information that has to process through your brain increases the difficulty. And let's just be honest, everybody's still a bit new in everything they do, even though you got 10 or 20 or 30 years of experience, you're still not extremely profitable based off what I would assume. And that's not a stab at your abilities or your track record. That's just the stats of the space, right? Don't lie to ourselves that most of us are having struggles, right? So why increase the struggle? I choose to day trade. Why? Because I've made the decision that I only need a couple trades a day to make a lot of money. Now, if you want a lot more trades, you can scalp, but my only request would be is to learn the day trading first and then drop it down, right? Stay in the day trade realm. Then once you feel real confident in your ability to do what I teach you, you can drop it down to scalping. Nothing wrong with that. Just know that you're going to get a lot more signals. You got to be a little bit more selective. Does everybody understand that? Give me a yes, that makes sense to you guys. Yes? It's all about understanding why we're going to do this. Now, the whole point of today is we're going to talk about rules for when we take trades and when we don't take trades. It's all about alignment. Okay. I've told you yesterday that a lot of my trades were because of emotions. And the only way I was able to fix that was through alignment, right? And one of the biggest things that I do is I never trade for large or multiples or trailing stops unless the indices are aligned or in strong trending markets. And so what we're going to do is we only trade momentum trades in alignment. And we can always trade trend trades as long as we have the alignment. You're going to hear me talk about alignment. Now, first of all, in order for me to make a decision, I pay a lot of attention to correlation. Why? Well, first of all, correlation in the overnight means absolutely nothing, right? We've developed a new version of the software, and the software, it resets at the open. You see how it just all started on the zero line right here? So I can track correlation off the open. Right now, the NASDAQ is the weaker market off the open, but that means nothing. We've only been 10 minutes. It means absolutely nothing, right? Like this will give you a little bit of sentiment, but the first 15 minutes, banks are manipulating the market, not to screw you over. They're manipulating the market so they can actually do what they need to do. So write this down. Banks aren't out to hurt you. They don't care about you. They don't know what you're doing, where you're doing it. They need to do what they need to do. Okay. So the reason I like the 15 minute and then I'll trade on the 3 minute, okay, is because I want to see what the banks are doing first and give them enough time to make a decision and know what trend they're trading. Because if I don't understand what they're doing, how the hell can I be good at what I need to do? Okay. Which is why I really like the 15 minute for decisions. I execute on the 3 minute chart. Why not 2 minute and the 10 minute? Why? Well, because it goes into how much data I've tested and how much optimizations I've done and back testing I've done and everything I've done. And basically, this is just about data, right? I've tested the 3 minute, the 1 minute, the 2 minute, the 5 minute, and the 3 minute just gave me a lot of just really good trades with a lot easier decision making. And 3 goes into 15 minutes, 5 fractals, right? 3 times 5 is 15. It's an even rotation into the 15-minute chart, right? Same thing with a 5 and a 1. 1 minute goes into a 5 minute, 5 fractals. I like to use a 5 fractal variation for day trading because it allows me proper rotations with my oscillators. And we're going to talk about the rules around this. Now, could we get a trade in here? Could this happen? Sure, sure. But let me explain the EMA settings. Okay, so this is very important. And I'll give everybody my desktop. Don't worry, you don't have to build this. So first of all, the white period EMA is a 10 period EMA. Okay, so I'm not asking questions right now, guys. I need to go through a lot, so I'll get to your questions after. Just let me get through this because we're at the open and I'm going to look to take trades in the first 30 minutes if it aligns. So just bear with me and just take notes, and then we'll go into questions after. EMA number 1, white, 10 period EMA. Okay. And that's everywhere. That's also on the 15-minute. So you're not changing your EMA settings. Okay. So let's just start with a higher time frame, a little bit easier. 10 period EMA, 100 period big picture. Does this make sense? Everybody type a yes in the chat box. You understand it. I'm not using 3 EMAs, 4 EMAs, 5 EMAs, nothing. I'm using 2 freaking EMAs. Keep it simple, keep it clean. 15-minute chart's not going to lie, right? We are in a what? Uptrend or a downtrend right now on the NASDAQ, right? Uptrend, yes. Okay, great. 100 period EMA, 10 period EMA. What I've got down here in the sub panel, this is important. You guys can write these down or watch the recording. I have a volume graph. Volume is everything because volume is my signals on the smaller time frame, but I still keep it on the higher time frame. Anyone? Richard, do you guys have an echo or is it Richard's audio? Do you guys have an echo? Is there a bad echo?
You
No?
sound fine, Sean.
I sound fine. Okay. Maybe you can just tell him to log out and log in. It might be just his internet. Yes. So the oscillator, okay, this is very, very important. This is super, super important. Okay, guys. The period for the higher time frame RSI is a 3 period. Do not change this. You have to make the 3 period super fast on the higher time frame for us to make the decisions that we need to do. Okay. 3 period RSI on the higher time frame. Okay. Volume doesn't matter on the higher time frame. You can just leave it as it is. I've got a three bar average, but volume is volume. I'm not really interested in the volume on the higher time frame. I'm interested on the RSI period. Okay. Then let's go to the smaller time frame. Same EMAs, 10, 100, and I just put a really big macro line in here. This is a 200 period EMA, just for the sake of just seeing where we really are at with big picture trend. But I don't use this. It's just an extra comfort. You don't need it. It's not necessary, but I just like it. Okay. Now, does everybody understand the EMAs? 10 and 100. Make sense? 10 and 100. Everybody got that? Yes and no? I like to make sure everybody understands the tools, right? If you're going to fix a car, make sure you know what a hammer is or a screw or a wrench. I don't think you want to use a hammer on a car, but um, let's talk about the oscillators now on the smaller time frame. The RSI is a 5. So why do you think I'm using a smaller period RSI on the higher time frame, slightly larger on the larger time frame, smaller time frame, right? It's a 5. So I have 5 period. We'll write this down so everybody can have it. Go into the settings here. Indicators. Let's just do 15-minute. Okay, we've got the 10 and the 100. Okay, we've got volume with a 3 bar average, and we've got an RSI 3 period. Everybody make sense on that? I'll just write it down so you guys. And then the 3-minute, we've got 10, 100, volume, 3 bar average. This is very important. And then the RSI is a 5 period. Okay. The 3 bar average is everything, guys, because it's your volume trigger, and your RSIs are your decisions between momentum and trend trades. So the 100 and so let's just talk about EMAs. Put an EMA here so everybody knows that. EMAs are your direction. RSIs are your triggers. volume are your triggers. We're going to talk about that. Does everybody understand that slightly? I know some of you might. It's going to take that. Okay. Now, I only take momentum trades in strong trending markets. We are in a strong trending market here. Okay. We are in a strong trending market. And ultimately, we are in strong trending markets on both time frames. One thing I want to mention is what's correlation telling me? Nasdaq's a little bit weaker. YM is a bit stronger, right? But YM on the higher time frame just crossed its trend. It's not really, really stronger. That's why I don't really pay too much attention to correlation unless they're all aligned. Okay. Let's take a look at the Russell. Strong trend. You can see that trend is strong trend, right? So we have really, really strong trends. And if you look at the correlation the overnight, okay, NASDAQ was strongest, Russell was strongest, but we need to pay attention here how the open unlocks. Now, S&P, let's take a look at it. Fairly decent, strong trend, right? Pushing trend, higher highs, higher lows. EMAs are strong up, okay? Let's talk about the order of rotation. Just going to keep making notes so I can give everybody the notes after, okay? Trade selection and frequency. Okay. Pullback trades always fire first. Momo trades fire after pullback trades. Okay. Now, you can sometimes get a Momo trade mid-leg. So, what's mid-leg? Well, let's say we're on a 3-minute chart and we don't pull back at all. We just get a momentum trade, right? Like that was a momentum trade right here. That signal was a Momo trade. This here, okay, was a momentum trade. These were pullback trades. We're going to talk about that here. Now, what I want to do is I want to talk about what's about to happen here. My favorite trades, okay, my favorite trades are alignment. Now, in strong trending markets, this is super, super important. Like if I can teach you one thing, I don't make my decisions on the 3-minute. Everybody wants to stay on the smaller time frame. Oh, the hell with the smaller time frame. I want to make my decisions on the bigger time frame. This is the 15-minute open right here. Okay, that's a 15-minute open. And I want to see the size of that. What's the size of that? I want 566 ticks. And we're going to take a look here. How big was that open? 500. That was just right on it. So it's a moderate open. Okay. Now, a couple things I want to talk about. I don't personally like to take a bunch of trades for no reason. I like to take trades when in strong trending markets, which we are technically, right? Let me grab the cursor here so you can see where my eyes are going. It's important that you guys follow along on this. In trending markets, which we are right now, the midpoint and the oversold position on the 15-minute are important right here and right here. Those are levels in which we would expect reactions off of these markets. Okay. So what I like to do, take a look at the Russell right now. The Russell, okay, the Russell is overbought. NASDAQ overbought. So yes, we could keep going, and sometimes that'll happen. That's where you need to say, whoa, okay, am I going to chase a moving market or am I going to wait for alignment? When I wait for alignment, sometimes I will sit on my hands and I will watch a trade go on without me. Sometimes I will say, hey, Sean, what's more important, putting money in your bank account or getting into the market all the time? We all know the answer to this, but we sometimes never do it because we're emotional human beings. We're creatures of habit. We do the things we know we can't be doing, but that never really makes us a lot of money long term, does it, guys? How many times have you broken your rules and you realize, shit, if I just would have waited, I would have made a lot more money, right? Or if I would have just followed my rules, I wouldn't have got that stop out. Or if I just would have been a little bit more patient today, I probably wouldn't be shaming myself and feeling like shit all the time. Right. So, what I want to do today is I want to talk to you about what I've done for myself. You guys can do whatever you want. I can't change you, but I will tell you what I can do. I can lead by example. Okay. I don't like to take trades when oscillators are not in the right location for me, right? If I'm going to take a trade on this time frame, see that trade right there that just happened midstream here? Could I take that trade? Sure. Could it make me money? Sure. Do I really want to take that trade right now? I'm going to tell you straight, no. Why? Yes, it looks sexy, looks real good. We had a lot of volume, came out of an oversold position on the 3 minute chart. I make my decisions on the 15 minute, guys. I make my decisions on the time frame that drives my decisions. You want to know why? Because big traders aren't trading on a 1 and a 3 minute chart. They cannot move enough orders. Do you really think big banks can pick up the phone, say, hey, I need to move 1,000 contracts. Can you take the order? Okay, great. Okay, where do you want to buy? Okay, great. By the time they're done freaking talking, a minute's already gone by. Then they got to go back to their platform and they got to figure out what's going on. Okay, then they got to place their level. They're not sitting there rushing to put in 1,000 contracts. They got to figure that shit out. They got to make decisions. That takes time. Traders don't think like that because we're just quick to rush in with 5 micros because we don't really matter, right? Like, so think about this for a second. If you're going to somebody's house and they're barbecuing for you and you're going into their home, into their environment, do you go to someone's house and tell them how to cook? That's an insult, right? Like, you're the guest. We're the guest. Write this down. We are the guest in the markets. We are the guest. And once you accept that, things will start to change. Be the guest. It's okay to be the guest. You can enjoy dinner. You can make a lot of money being a guest, but just know when it's time to participate. A couple things too I want to talk about is let's take a look at the S&P. Okay, I want to talk about the size of the opening range. We're not going to go too much of this, but the size of the opening range matters a lot. We're going to be talking about this over the next couple weeks. Okay, I write these down just because ES 82. I just want to see the size of these opening ranges for a second and see if these are probes. Yeah, that's a probe on the S&P. That's a probe. Okay, what do we got going on here on the S&P? S&P just hit midpoint, strong trending market. Okay, NASDAQ might come down, hit midpoint on the close of this candle. So let's take a look at the S&P for a second. Hit the midpoint, strong trending market. Okay, breaking below the low of that 15-minute orb, right? How many times do you see an opening range just fail and just trade up the other side? Many times, right? So let's take a look over here. You see this candle right here? This is a pullback trade. I only trade pullback trades. Only trade pullback trades when we are either at a midpoint or at an oversold position. Does this make sense to you guys? I will not take a trade unless my higher time frame is either at a midpoint or an oversold position. Now I'm going to tell you right now, which one do you think has higher probability? Midpoint or oversold? I want to see if you guys are thinking like I'm thinking. If I could look at exactly, Jeff. Midpoints are great. Right now, the market's still trying to figure itself out. Why do we want to rush a midpoint trade if the market hasn't really shown us that we're going back up? We're still in a pullback on the higher time frame right now. So I'm going to wait. I'm going to wait for them to probe lower. I'm going to wait for them to probe to an oversold position in an uptrend. Wow, imagine that. Higher time frames going up. Wait for the higher time frame to go into an uptrend in an oversold position. It's only going to take one more candle to close, and then the oscillator will push down. Why? Because we're using a 3 period. This is the key, guys. This is the key to the settings. This is the key to the alignment. This is the key to everything. Everything has its place. If I can tell you right now, if all you did, and this is going to be tough for some of you, but it's going to work really, really well. Highest prob trade. Okay. 15-minute oversold, 3 minute oversold, buy the pullback, buy the long signal on HATT for pullback, or wait for Momo after pullback trade fires. You understand this? So what'll happen here? Let's say this goes to an oversold position. It drops down, right? This pushes down a little bit more. This comes down here on the 15-minute. That's a good thing, right? Take a look at this one. What happened here? Trend crossed over, pull back. Let's draw a little box so we can see what's happening here. We can understand the logic. It's really important. Right there. So let's just draw a little line up here. That was an oversold candle, right? We had CPI out today, so that's good. Let's take a look at this. What happened here? Got the pullback trade here, got the momentum trade here, momentum trade here, momentum trade here. That was the pullback trade. That was the Momo traders kicking in once they could see that this is actually holding. But the point was, is that that right there and that right there were aligned with the 15-minute. So I don't trade the 3-minute. I enter on the 3-minute. I trade the 15. Just like if you're scalping, we don't trade the 1-minute. We trade the 5-minute. We execute on the 1-minute. You guys got to understand that there's a reason for this. Why? Because you're going to increase your efficiency tenfold. So let's wait for a second, right? Let's wait for this. See how the Nasdaq's dropping even further? Because we're overbought on the 15-minute. Don't lose sight of this. It is critical. So let's go to the Russell. Let's take a look at the Russell. Now, there's the 15-minute. Take a look at this. So let's go here. Jeff Conley says, this trade is effing brilliant. We will get through that. I can't follow your lingo, but I can definitely agree with you. I'm just going to take a look here at the Russell 100 ticks. Okay, let's see how big that Russell bad boy is. These are all 115. Yeah, they're all probing that. They're all probing that. Let's take a look at the NASDAQ. 566. Thought I did that already. There it is. Did it yesterday. There we go. Yeah. Okay. And let's take a look at the Russell. Russell's coming in overbought. Of course, they're going to drop it. Higher time frame needs to pull back. Banks need to load up. Market needs to go lower. Fill orders before it can go higher. Banks need to do that. Banks aren't going to go here and just keep pushing it unless something really fundamentally need to happen. Okay, now let's take a look at the YM. YM's a bit messier open and not too many traders trade the YM. I trade the YM when I know it's the right market to trade, but it's not really everybody's favorite market, but I will trade it sometimes when the correlation matters. We won't load too much onto you guys today with this. We'll do another workshop and we'll go more into it, but I'm more interested in the Nasdaq, the Russell, and the S&P. Right? Those three are your more aligned markets that we'll trade and normally give you a little bit more volume. Most of you will trade the S&P and the Nasdaq, so we'll focus more on the left side, but we'll talk about this, okay? So let's take a look, okay? Momentum trade pushed. You notice how it came back? It came back because the higher time frame and the smaller time frame are not in alignment. So write this down. Trades are going to give you a shit show of a time if the time frames are not in alignment. Never trade when the time frames are not in alignment. It is write it also down. It is okay to miss a trade. It is okay to miss a trade when we are not in alignment. Does this make sense, everybody? I'm telling you, if you're going to be a scalper, you must live and die by this because you're going to get cut to shit if you're scalping on a 5-minute. Let's go to the scalp time frame. Take a look at it. You'll see it. I'll show you. It's just crazy signals all over the place. You're going to have tons of signals all over. We're going to move them over. Give me a second. And like I said, I normally don't take a trade for at least the first 30 minutes. Now, please do not start trading on this time frame, guys, until you get through this workshop and I teach you everything you need to know and all the things we're going to do. Okay. We're going to take a look at stuff here. Great example of getting smoked and stopped out on a 5-minute if you were not paying attention to what's going on. So, yeah, no, I don't trade the first 15 minutes. Not a chance. Not a chance. Yeah. So this is why I don't trade anything that doesn't have tons of volume right now, Julia. I trade gold, crude, all that, but I'm an indices trader. Why? Because I can use correlation to my advantage. You can't use correlation to your advantage using commodity markets. Correlation is a really, really part of my success. We'll talk about that in a second, Julia. So we can look at other markets after, but let me just talk about this. So let me give you an example, right? 5 minutes in an uptrend here, yes. See this? This is why scalping's harder, and we're going to talk about this. See how the 5 minutes up? Everybody see this on the S&P? 5 minutes in an uptrend. Yes, you can see that. We're oversold. Yes, you can see this. Type a yes if you're in you're understanding this. I need to know where your head's at. Yes. Take a look at the 1 minute. We're in a downtrend. That's where the brain starts playing freaking tricks on us, right? 5 minutes up, 1 minute's down. Oh my God, what do I do? Maybe I should short. Maybe I'll go long. Oh my God. Like next thing you know, the brain is just firing on so many cylinders. This is why we don't scalp until you're really, really good. We're day traders first, scalper second. Why? Because most traders are not equipped to be a profitable scalper until they truly, truly have skill sets. Okay. Now let's talk about this. We are in a prime location. We came down, we're wicking below the orb. Okay. This is a great example of letting the banks do what they need to do. We are still in an uptrend. We are pulling back. We are oversold on the 15-minute chart. And there's a really good chance that oversold will catch a bounce in here. So what I want to do is I want to make sure that I stay within my trend on this, or I won't have a trade. I want to make sure that the 3 minute aligns with the 15 minute, or I can't take a trade. It's that simple, guys. It doesn't need to be difficult. I want alignment. I want to make sure that the 15 minutes oversold. I want to make sure that the 3 minutes oversold, which it is, by the way. Now I need to let the buyers step in. Let the candles change. Let the buyers show you they want to step in. Does this make sense? Now the EMAs need to be on my side for a pullback trade. These EMAs need to stay up. If they cross, I won't get a trade and I might miss a pullback and I might have to get on a momentum trade because I don't trade against alignment. And this is where everybody's like, oh, I don't want to wait. I need to be in a trade. Okay. Have you doubled your account in an entire week before? That's where you need to take time off. Isn't the issue that by the time the higher time frame turns happen? No, no, that's not true, Jay. Not at all. Not at all. Let me ask you a question. When you're in the military, okay, when you're in the military, who is the most elite person that's on the firing squad? Is it the front line? Is it the guys in the tank? Or is it the sniper in the hill that nobody sees? It's the sniper. The cook, yeah. Cook, because everybody needs to eat, right? Okay. Trust me when I'm telling you this. I have traded hundreds of these trades, momentum and pullback, and we must wait for alignment. I do not fill. No, I don't do anything, Gordon. I don't look at gap fills. This is where all the brains start coming in. Look at everybody's like, what about 3BP? Do you see how the human brain, like, not, can I call you guys out? I love you guys. I love all you guys. Let me explain this. I'm sitting here teaching one strategy, and the last six comments were, what about that? What about this strategy? What about if we add this? What? This is the human problem. This is the problem, right? And what I'm trying to tell you is that if you guys stop that, things will happen for you, right? Now, that doesn't mean you can't look at other things, but if you're trying to master something, master that and then stack on top. Super, less is so more, right? Less is so more. Now, you got to ask yourself, look at all these wicks coming in here. Look at all these wicks coming in here. In a strong momentum market, you don't see those, right? Yes, they're probing. They're probing on purpose. They're probing below that orb on purpose. They're loading orders. And they might even wick down below these two wicks to sweep stops or whatever. Who cares? Right? Because I know that the likelihood of the 15-minute in an oversold position in an uptrend is going to catch a bounce. That's the likelihood. There's a really good probability that that'll happen. Why? Because I've set the software up to do that. See how they're probing down here? All the 15-minute breakout traders are not paying attention to this trend. They're also not paying attention to that oscillator. So if they take the breakout here, the high probability of them not getting the follow through is absolutely true. 15-minute orb traders are having a hard time right now. Why? Because they don't realize what the market's doing. They don't realize that all four markets are in an uptrend. Okay. All four markets are now oversold on the 15-minute chart. Now, if this EMA crosses down, that's okay. That's okay. Let's take a look at the S&P. Look at the NASDAQ. Bit stronger, is it not? NASDAQ's a bit stronger. See how the NASDAQ's a bit stronger inside that orb? Look at the 15-minute on the S&P, a little bit weaker. Pay attention to this. Look at this. You can see the NASDAQ's holding some strength, whereas the 15-minute S&P is dropping down, right? Same thing here. You can see, let's just switch this to a 15-minute, and you can see the correlation. I'll show you this. Correlation's everything, right? NASDAQ stronger, S&P second, Russell's weakest. See that correlation right there? See that 15-minute correlation? That's important, right? That means if I'm going to take a long, NASDAQ has the highest probability of success, right? So take a look. NASDAQ's going to probably on this next close in about 5 to 8 minutes, NASDAQ's going to give us a trade right here. Just got to be patient. Nobody wants to be patient. I don't blame you. We're not normal. We're humans, right? Humans aren't not necessarily patient creatures, right? We want everything now. We need everything to be now, right? Now, we're going to wait. We're going to let the market do its thing. We're let the market tell us what it wants to do, and we're going to talk until that happens because I'm not here to take a bunch of trades for no reason. I'm here to teach you how to not take a lot of trades and take the ones that matter the most. Does this make sense, everybody? Now, some of you might say, oh, that's boring. Making money is not boring. Making a lot of money is not boring, right? Yeah, I can place the 15 minutes. Just I've got four markets and I'm only able to do this on a one monitor, Kenneth. So you could easily do that. You could put the 15-minute on the left, 3-minute on the right, 100%, right? I'm just doing this because I have to teach and I've got 1, 2, 3, 4 markets. But yeah, you could easily do this. Right? You could easily do that. So you could easily see that 100%. Momo is momentum trades. So if you wanted to do that, you could easily do that. Just see it. That's a midpoint trade. If this drops off, you see how we're not getting a signal here? There's no volume. It's very important. Volume's got to break that average. Volume's got to break that average, which means we might get a momentum trade in here. We're going to see this. We're going to wait. We're going to wait. Some of you might say, well, that's not a lot of excitement. Yeah, but if I take 1 or 2 trades, right, in the morning, ask yourself, if I'm a day trader, I'm not a scalper. This is day trading. If I'm a scalper, maybe I'll take 5, 7 trades. If I'm a day trader, maybe take 2, 3 max, right? Jeff says, since you originally introduced this trade, it has absolutely changed my level of patience. No rush and best trades I've ever taken. Gary says, isn't that divergence long on the RSI? Yes, but which time frame are you trading, Gary? Are you trading the 3-minute or are you trading the 15? We're trading the 15. 5-minute is the entry. I'm waiting for volume to step in here. So if this gives me a volume signal, right? If this gives me a volume signal, there's a trade here, right? There is a trade here. It's just got to give me, it's got to give me the cue, right? This is oversold. This is at a midpoint. If the S&P is at an oversold position, right? Look at the EMAs crossing because it's a little bit weaker. So that's why I'm looking at the NASDAQ. I want to see if the NASDAQ give me the follow through. Make sense? And this would be a confluence trade between higher time frames, but I just need to see the alignment. And we need 5 more minutes before that 15-minute candle closes, which would give us the trade, the rotation. I need to see volume step back in here. Make sense? And the NASDAQ's the strongest market. You can use ATR. Yes, you can use average to range for stop placement. I will use structure if I believe the structure is big enough, right? So the hat signal is going to give me the signal. The hat signal is going to give me the entry, right? Now, we also have an S&P that has an opportunity here, probing lower, right? These EMAs crossed, so we would not get the pullback signal, but we would get the momentum signal as the EMAs cross back over. That's why I look at correlation. So I trade the right market. I don't force myself to trade the wrong market, right? Take a look here on the Russell. Russell's the weakest, third weakest market. YM is also weaker, right? I would not trade the YM. I don't like to trade weaker markets. If I'm trading long, I trade stronger markets. The Nasdaq and the Russell are, or the Nasdaq and the S&P are stronger, right? So if we get a volume trigger here, this would be a trade. We need to wait for the volume trigger to happen. There it is. So I'm going to take this trade, guys, just because I can see that we're on the midpoint, right? We can go in here. So I'm going to take that trade. I'm going to see if we get the follow through. I'm going to take 15 off on, take 20 off on 0.5. We're going to see if we get that follow through, right? We're inside that orb, right? We're coming out of the midpoint. S&P is oversold, right? So when this candle closes, okay, when this candle closes, we should get follow through to push up, right? That was the cue. So we're going to wait. We're going to see. Now, I might get a little bit of heat in here because I still have 3 minutes till that 15-minute candle closes. We'll see. And we'll wait and see if they want to keep going up. And I will trade this always. Now I'm trading big size, guys. Don't trade big size like me, right? Don't do what I do. I'm just teaching the concepts. Now, if you wanted to wait, if you wanted to wait until the 15-minute closes, you can do that. If you want to wait until the 15-minute closes, by all means you can, right? There's nothing wrong with that, right? The S&P is oversold, right? The oversold on both time frames. Nasdaq stronger market. I'm just waiting for the 15-minute candle to close on the Nasdaq because it normally gives us better follow through. But and if this stops me out, I will enter again, right? Because I believe in what I'm doing. I believe in the work I've done. I believe in the data that I've done. I believe in the trades that I've taken. I wait for the 15-minute to close and that can be something you can do as a trader, right? Like I'll show you this. Like if the 15-minute hasn't closed yet, right? If the 15-minute hasn't closed yet, then you know, you can wait. It's your call. Now the strongest market is in my favor, and the 15 minutes going to close in 30 seconds, which will confirm the oversold position inside of the Nasdaq, or it'll be a midpoint trade. Now we're in strong trending markets. We've pulled back to flush the bottom of the orb. We'll have to wait and see if they want to rotate. Now the Russell's pulling us down. It's weak. Russell's giving a lot of weakness right now, right? So sometimes when the weaker market, they just keep dropping and dropping. Sometimes the other markets have a hard time pushing up. We have to wait. So there's the oversold, and that's the thing is that the Nasdaq is slightly not yet oversold, right? And that might give this push another down. We'll have to wait and see. Sometimes these types of rush trades like this is technically not oversold yet, right? It's a midpoint. So that's what I mean by alignment, right? This is why I'm doing this to show you this. If this is oversold, this will have a whole lot more push of follow through, right? We'll have to wait and see. Have to wait and see if there's enough push here because the S&P is still holding on the lows, and we'll have to wait and see if this buyers can step in here. If the S&P can push a rally and the Russell can push a rally, that will give us the push we need to push the Nasdaq higher. That's why I look at correlation. That's why I don't just trade any market and be like, oh, what am I doing here? Like the market's not going up. Pay attention to correlation. Correlation will drive every decision that you make from a higher probability perspective. The weakest market now is the Russell. So if the Russell catches the bid, it's going to push these up higher, faster. That's the key. Watch the weakest market while you're trading the strongest market long. That's important. That's very, very important. And the Russell's oversold right now on the 15-minute chart. So when the Russell's oversold, okay, and it starts to rally, look at the volume on the higher time frame on the Russell. As it's going down, the volume is dropping. That's important. That's important. This is what I talk. This is why when I trade indices, you can't do this with gold. You can't do this with crude, right? You don't have three other markets telling you what's going on with these markets, right? And M2K is the Russell. That's the RTY, Jeff. Yeah. And so all of these markets are oversold on the higher time frame. And you got to remember, it takes time for the higher time frame to finish doing its orders. A lot of people get scared that, oh, they're in the wrong trade. I'm not afraid of being in this trade. You cannot be afraid. You have to have faith. You have to have faith in what you're doing. You have to have faith in your signals. You have to have faith in the process. You have to have faith in the indicators doing what they're doing. Does this make sense? Does everybody understand what I've just done and why I did it and all the things that I'm talking about right now? Exactly. Or overbought, depending on the trend, right? Now, what I'm waiting for is I'm waiting for the S&P and the Russell to catch the rally. Why? Because the S&P was a bit weaker and the Russell was a bit weaker. So when these markets start to catch the rally, the stronger market has a higher probability of pushing strength. That's why I pay attention to which market I make the decision on. Does that make sense? I don't enter on anything. I enter on the signal. This is a HATT system. This is a HATT signal. Now, I'm not going to pretend to be better than anything other than I am. If I take a win, I take a win. If I take a stop, I take a stop. I trust the logic of correlation. I trust the logic of overbought and oversold. I trust the logic of the multi-time frame alignment. I trust the HATT volume trigger. The volume in the Heiken Ashi is the trigger. That is the signal, right? This is a HATT system strategy class. The HATT system is the trigger, right? The reason we're getting into the candles is because of the volume entering the candles. The reason we're getting into the trade on the bar that I got into the bar is because buyers started stepping in on that candle. Buy volume is starting to push in. But you got to understand that the markets are not just about whatever time frame or bar you entered on. And that's why I prefer indice trading over other markets because I can look at alignment, I can look at correlation, I can understand what's happening between the markets. And that's important. Now, have I ever taken stop outs? 100%. Do I trust the system even if I take a stop out? 100%. Because I've seen what I've been able to do with it, right? And I know what I'm able to accomplish with it. But markets are still going to do what they do until they don't, right? And what happens is if, let's say I get pegged here, let's say this stops me out here. Okay, for whatever reason, let's just say it stops me out. Okay, was that a bad trade? Absolutely not. It was a great trade because I followed alignment, but the Nasdaq's still not oversold. That was a midpoint alignment, right? The better ones are oversold here. The best trades are oversold here. Nasdaq still wasn't oversold completely. And that's the issue. And I'm glad this is happening so you can understand the difference between the highest probability and the medium probability locations. Does this make sense? It's very important, right? Very important. because we're still in a pullback on the higher time frame. Higher time frame's not done filling orders here yet. Does everybody understand this? Practice in a sim account. This is sim for a purpose, right? We teach in sim so that everybody doesn't lose a bunch of money when they're teaching concepts and all that stuff. Listen, let's go back to this. Let's dumb it down again. Okay, let's dumb it down again. I am not trading this. I am trading this. I use this to decide when to enter. Make sense? So I look at the higher time for the decision. We're still stuck inside the 15-minute orb. The market hasn't decided what the hell it wants to do yet. It might flush down. S&P might stay oversold for a bit. We got to wait. We have time. Make sense? So if the markets are still not done filling orders and probing lower, then how can you expect the scalps to work? Why do you have more sell limit orders than entry orders? I don't. Oh, yes, I do. Thank you. That was a mistake on my orders. That should be 10. Good call, Frank. Appreciate your help. Okay. Now, the key here is looking what's happening on these markets, right? The key is the higher time frame. I don't like to look at the smaller time frame a lot. I enter on the smaller time frame, but I really pay a lot of attention to the higher time frame. Why? Because the higher time frame is why I made my decision. The big picture is why I made my decision. The smaller time frame is why I execute inside of that decision. Make sense? So the signal to execute is the RSI and the volume are the right spots and EMAs are on the right direction. All the things I'm really impressed how you can so calmly trust your strategy even when it's negative at the moment. I'm human. I really feel good that the first trade I took in front of 150 people is giving me heat? No, but I trust what I'm doing. I believe in everything that I've been doing. I know that I can teach you guys how to sit on the right side of your hands and not blow up your accounts. I believe that everything that I've worked on for months makes a lot of sense, right? I believe that all of the trades I took and all of the alignment and all of the back testing and all of the work that my team and I have done can help you guys become more profitable. So of course I'm going to execute the trade that made sense. But realistically, if you really want to know the truth, I should have waited until the NASDAQ is at the blue line because all these markets didn't push up in an uptrend yet, right? They're not pushing up, they're still pulling back. So the midpoint was an aggressive trade. I entered an aggressive trade. So knowing what you did is just as important as doing it. Do you understand that? And this trade, right, was in the midpoint when I entered that trade. So the highest probability trades are when this is here and this is here, and then I get the trigger. That's why I'm teaching this to you. Make sense? Now, what do you think's happening here? What do you think's happening here? Get a whole bunch of sideways market activity. What do you think they're doing? What do you think they're doing? They're building a position. And guess what's going to happen? We're going to get an explosive move to one direction, right? Now, what's the likelihood of that direction? What do you think? What's the likelihood of going higher? Well, I'd like to think it's a hell of a lot better than going lower. Everything's lining up for buys. But that's why you have a stop loss. Because you could do everything right in a perfect world and shit still happens. However, right? I still believe in what I'm doing. It's not just about faith, it's about knowing that you've done the work so that you don't have the fear to talk yourself out of what you're doing. Now, like I said, the highest of the highest probability is when the NASDAQ confirms this. There's resistance here at these wicks. There's a lower high test right here. So I like to have my target just before that. So I don't, and this is my first trade of the day, right? So basically, I want to take some profits out, put some money in the bank. I always like to pay myself a little bit before I start worrying. And are we really strong trending right now? That's the question. Like, yes, we're in an uptrend, but are all markets going up super, super fast right now? And are they all giving like super follow through right now? Not yet. So going with a zero point 0.5 target is about condition assessment. So could you come down and maybe do this? Is that wrong to do that? No, because your conditions are still not, we haven't yet given the follow through of all the markets. They haven't all pumped in yet. They haven't all given the follow through. So these are the things that I look at, right? And look what's happening on the Russell. The Russell started to build a position off that 200 period, starting to show wicks here. Russell's catching a bid. Russell's catching a bid. What's it doing to the NASDAQ? Hmm. Look at that. There's the volume signal. Momentum signal came in here again. Yeah. Back to back momentum signals. One, two, three. But like I said, just because you get 3 or 4 green arrows on your chart doesn't mean you should start buying the market. It's all about location and context. And there's a good chance that if it can keep pushing above the midpoint of this orb, that it'll try to take out the opposing side of that 15-minute orb. We just got to wait and see. Let's take a look at the S&P. There's a big alignment between the S&P. Look at the S&P. Oversold, oversold, volumes dropping on the oversold. As the pullback happens, you want to see increasing volume on the run, decreasing volume on the pullback. You want to be in locations. Look, the Nasdaq still is not oversold yet. Interesting. Wait and see. Take a look at the Nasdaq. Take a look at the S&P. So the S&P is crossing. That's a good sign. That's a great sign. But also look what's happening. S&P is overbought. So there could be a pullback before we get the rip. Understanding the logic, right? 3 minutes have enough to give you movement. 1 minutes are just blips in the market. A 3 minute overbought or oversold is a decision for trade management, right? Like we'll talk about trade management after. I really want to spend the first hour about in alignment in discussion where we are, right? Right. But I really, really want to see volume increasing on the next candle. I want to see this 3 minute candle close with increasing volume. That'll be a good sign. We'll give it time. I believe in everything. We'll give it time. But like I said, we can't expect everything to just pop until it does. And all these markets are still building their position. Take a look at the YM. I just want to see what the YM's doing. Yeah, the YM is way oversold and way pushing through, not in alignment. So what do I expect here? Okay. Well, I expect that this market, okay, got to an overbought position. So I entered here when we were coming in here. But as it's building this position, it now became overbought. So I expect a little bit of heat. That's okay. However, right, as this pulls back a bit, I expect this to give me some push as the higher time frame kicks in. Now, this is why I look at alignment. I look at the two time frames because I care about understanding what I'm doing and why I'm doing it, right? And I care about understanding why I make the decision to enter these trades. So it's really important that I talk to you through this so you understand why I did what I did and what's going on and all that stuff, right? We're still waiting for the volume to kick in here. We still haven't seen a lot of buy volume kicking in here. So we need to wait for the volume to really, really push in. Look at the S&P. The S&P now has confirmed oversold, right? Came close on the NASDAQ. Came close on the NASDAQ. NASDAQ's definitely stronger. Okay. But let's take a look at the 3 minutes. Okay. 3 minute volume needs to pick in. This volume, like I said, remember what I said about we're still overbought. So we should see a dip before we see a rip. if this is going to give us that follow through. Pay attention. That's why I look at these oscillators. That's why I look at these oscillators and I really pay attention to what's happening. Now you don't have to look at the S&P if you're trading the Nasdaq. The S&P is at an overbought position on 3-minute chart. Take a look at this. Overbought. So of course we're going to get a little pullback. It's overbought. But and if it drops and it tanks out and it stops me out, right? If it stops me out and it just does that like that, okay, was that a bad trade? No, it wasn't. Markets couldn't give us the follow through. Maybe they're flushing, maybe they're doing what they did, and that's just life, right? Would I take that trade again? Yes. Let's wait and take another trade. Wait for them to flush down. I think they're flushing stops, to be truly honest with you, until they rip up, but we'll give it another chance and we'll take another entry. We'll wait for the oscillator to go back into an oversold position. I'll re-enter this trade. I think they're building a big position. I think the Nasdaq just ran all those stops, and I think they're going to rip up to the upside. And if that's the case, then I will re-enter the trade. Does this make sense to you guys? How do you stop that? You don't. Is the higher time frame still in an uptrend? Yes. Do I take stop outs? Yes. Will I enter the trade again? Yes. Take a look at the S&P. Look, they flushed. Remember what I said about the S&P needs liquidity? What'd they do? They came down in a real big manipulation play. They waited for everybody to put their stops below the low, and that's fine. You don't know it's going to do that. But both markets now are oversold. All of them are oversold. So we'll wait again. We'll take another trade. That's okay. If crude inventories just came out, that's fine. Crude inventories was bad. So we're going to wait for another signal and then we'll take the long again. Why? Because we are still in an uptrend and we are oversold on the higher time frame. Very important. Let's watch the higher time frame. Now, a couple things. I want to ask you if you've seen everything that I've done here for a second, okay? Couple questions for you. Was the Nasdaq truly in an oversold position? Has it gone to an oversold position on the 3 period? Nope. Right. Has the S&P? Yes. So the S&P, if it crosses back over to the upside, I will take the long. Does this make sense to you guys? We need to wait. We need to be patient. And realistically, you should not take a trade until that's oversold. This was aggressive. And we talked about that. Being aggressive. But how do you know? You don't. So could you go in with half size if you're aggressive? Yes. Or you take your first trade on half size. That way, if you take a stop, you're only a stop on a half lot. These are all little money management discussions, and we'll talk about money management after. But if I just come in and I take a trade and I basically don't take a stop loss, you're going to call me a fake. So I'm glad I take a stop loss because I can help you understand these things. Now we're going to wait. Yes, we're in an uptrend because the higher time frame EMAs are up. Yes, 100%. So this is consolidation. They're definitely going to be moving the market in a big way. The market can't stay in one way forever. This is why it's super important, right, to understand that. Look at the consolidation. They are building positions, building positions. The market has to go one way, but look at the higher time frame. All 3 markets are oversold, and we're not in a downtrend. So what are they doing? They're sweeping lower, taking liquidity, and we wait for the oversold positions. The Nasdaq might push lower, and then once the Nasdaq goes to an oversold, so we'll wait. Make sense? Now, if you were looking at the 5-minute and the 1-minute, we'll talk about this in a second. 5 minutes still in an uptrend. Look at the Nasdaq. Look how noisy the Nasdaq is in a 1-minute. People would get smoked in here, not knowing what they're doing. This is why I'm comfortable with my decisions on this. I am not upset about this. I am waiting again for alignment. Did you know yesterday that when I went into the webinar, I took a win, I took a loss, and then right before the webinar yesterday, I took a trade and I made my loss back and I made my trade back because I waited for alignment. it's all about alignment, guys. So let's wait for alignment. Higher time frames oversold. Both these time frames. Okay. Take a look at this. Oversold. All four of them are oversold. So I want to wait until the other markets give me a reason to trade. So we'll wait. You will see. You will see why this is so valuable. All of my back testing when I did the optimizations for the systems, it was a 450 tick stop. So 450 ticks is like down here. But I don't necessarily do that when I'm trading discretionarily. As an algo trader, yes. But as a discretionary trader, like I will trade, and you might use ATR, which would give you a bigger stop, and you might not have been kicked out on that, right? Remember, everybody can see the structure. Nobody can see if you put a stop here or using ATR and stuff. So just little things you can do for stop placement. But we're going to wait. We're going to see what's going to happen on the Russell, and we're going to wait and see what's going to happen on the S&P. Because I think they're building a big, big position here in the uptrend, and I think that they're going to give us a pop. And they're going to want to try to trade to the upper side of this orb. That's what I think they're going to do, to be honest. Because like if they were going to drop lower on this, that would have already happened. I was on that Friday a few weeks ago. That was amazing to watch happen, Dan. Yeah. Listen, let's watch what happens here. Remember, Nasdaq's a bit stronger. Look at the S&P, a little bit weaker, right? So remember, we need to see the Nasdaq do what it needs to do here, and the Russell's sold over here as well, and it's just the markets are not in alignment. In fact, the higher time frame and the smaller time frame on the S&P and the Russell are not in alignment. Same thing here. These are not in alignment. Okay, so this and this not in alignment. So the Nasdaq is in alignment. Look at the 3 minute. 3 minute is up. 5 minute is up. 15 minute is up. Excuse me. So we will wait. We will wait. Russell just swept the overnight lows. S&P just swept all those lows. Look at the buyers on that wick. This is another re-entry for me, I think. We'll wait and see. I want to see the alignment happen here. Patience. And it's just as hard as for me as it is for everybody else to be patient. Don't think I'm special or anything, or I don't make mistakes or anything like that. I will tell you straight if I was being aggressive or if I wasn't. It takes time. Look at how sideways they are. Look at how they're still inside that 15-minute orb. Do we have any more news here today? Bond auction. That's important. 10 o'clock. Oh, that's not until after the close, so never mind. Exactly, Michael. The 15-minute has still not cycled below, and the S&P has, and the Russell has. So I believe, would you wait for your long entry for a bar with no wick or bottom, or don't care? I don't care about that. I care about watching the weakest market, which is the Russell catch its bid. That's the big one. The weakest market needs to catch its bid. The 15-minute wicks are important, obviously, on these candles. Look at the buyers coming in on those bars. That's important. That is important. Yeah. You got to remember there's overlap between these markets, right? In the S&P, 100 of the Nasdaq stocks are pretty much in the S&P. 30 of the Dow stocks are in the S&P. So there's alignment. The Russell's independent. So the Russell stocks are not in the S&P or the Nasdaq, right? So the Russell stocks are going to do what they do, and they have an effect. They have an effect on the alignment, but I just like to pay attention to it. I want to see the big volume step back in. It's going to the S&P. If the S&P closes back up and gets that crossover, we should see that rotation. Then I'll wait and see for the volume signals. And it's been kind of funny, like the last three The last 5 days have not really been strong trending. Like it's been messy, noisy off the opens, right? It's been noisy off the opens. But what really makes me happy about trading with rules is that I don't give a lot of money to the market. Does that mean you'll never take a stop? No, but I don't give a lot of stops to the market, right? And normally, once this consolidation is done and everybody sees this pop and it breaks to the upside, then the trend kicks in. And a lot of times the trend doesn't kick in until 7, 8 in the morning. Yeah, well, the CPI this is the CPI result of like consolidation. They're making fundamental decisions to add orders or drive liquidity. Doesn't matter. I still go back to where's my oscillators? Where's my trigger? I don't give a shit about all that because nobody knows, Michael. Nobody knows what the banks are doing. You can just see the candles. They're consolidating a position. And realistically, this stop out is just a result of the fundamentals that came out on crude. They swept lows and who cares? I don't care. I just know that I got to make my money back and take another trade. That's weird, Omar. I don't know. I've never seen that. We just released a new build, so it should have been fixed, probably. No volume yet. You see that? No volume here. So they're not ready. The buyers aren't stepping in yet. There's still consolidation. They're still waiting. And this is why I like day trading, not scalping, because scalpers are getting smoked right now because they don't know which way they're going, right? Day traders aren't like you're gonna in really, really, really like this is not a clean open. You understand that? This is a messy open. So messy opens, my rules, what? One stop? I'm okay with that. Because really clean opens and strong trending opens and really strong breakout days that really, really sets the tone. Everybody understands that. But on days like today, it's the rules that I'm showing you that are going to stop you from going back and forth and getting smoked. So let's take a look at the S&P. Look at the big buy on that. Look at that. Look at that candle. That is a buyer's wick, right? Buyer's wick. We're going to wait and see the volume on that. It'll close in 3 minutes. Should see. Look at the Russell. Pay attention to the down bars. 1, 2, 3, 4. 1, 2, 3. Look at the volume dropping on the down push. That's important. As the pullback happens, volume is declining. Make sense? We need to wait for the rotation. And I'm still a big believer that the NASDAQ is a stronger market. It's a stronger market, right? We can put this to a 3 minute because it is stronger in the 3 minute. It's messy, messy open. Patience. Mhm. See how the S&P wants to push up? Amar says, scalping is too hard. You have to be right on direction, right on your size, right on the risk, right on all of that. Anytime you mess it up, you just get smoked. Absolutely. Right. And like I said, volume is everything. Yeah, I don't do orb trades when I'm going against big time frame levels, right? Like we should get some follow through here. I believe we're going to get some follow through here when those EMAs cross. As long as the volume can step in, that'll give the follow through. Everything has to do with the volume, guys. If the volume doesn't come in, we're not getting any movement. And that's why the HATT system is built on volume now. We're not just built on candle patterns. See, no volume on the 3 minute. You see, volume is not stepping in yet. Volume's not stepping in yet. Buyers are not convinced. Big important part of today's lesson is that even though all this is happening, we still have not proven buyers' intent. Really, really important. And as a directional trader, right, I want to be confirming that buyers step in. Makes sense. Are you guys learning from this? Now, trade management. Let's talk trade management, right? Would we go for a trailing stop right now? Would we go for a 2 hour multiple target right now? Are the conditions showing the movement for that? Not a chance. So today is about 0.5s and 1-to-1s until the market breaks into a strong directional move, right? So this is important because understanding the condition of the market has a lot to do with what you should be expecting out of those trades. Very, very important. Not yet. Buyers aren't there. Chop fest. Right. And even in a chop fest, Mark, right? We have rules that we don't trade it. That's the whole point. It's recorded, right? The whole point of me is that, even in a really messy open, I'm not getting beat to hell. You got to remember that's just one trade for me. On a 100K account or a 150K account, right? I trade 2.5 to 5%. Okay. So that's a 5% risk, right? That's okay. It's aggressive, but that's just the way I trade it. Now, what do you see on the Russell still? What do you guys see on the Russell? It's its own beast, right? It's its own animal, right? It's just going straight down. It's just breaking down, right? But all the other markets aren't. So you see how one market can do independently whatever it wants? It's because there's a bunch of stocks that are independently in this index that are not in these indexes, which is why you got to be careful that you look at the weakest market. And when that catches the bid, there's a chance that there'll be follow through. Now, we need to be patient. I'm just really glad today's opening like this because it'll teach you guys a lot. Everybody feels like a jack of all, everybody feels importantly great when the markets are doing what they want to do. They're not doing that yet. Markets are not doing what we wanted to do yet. Would you guys like for me to run a few more of these so that we can have more sessions in different conditions? So that we can basically do them together and you can see the logic in every day? Yeah, I think what I can do is I could do some with you guys and have you help you guys with just understanding that, right? Yeah, I will put that together for you. I will make sure we do this together. Yeah. I still think we're going lower until we go higher because these markets haven't showed any buy volume yet. They haven't shown any buy volume, which means they're either building some massive position or we're just gotta be patient. Remember, the 15-minute chart hasn't kicked in yet. We think it will, but it hasn't. Patience is key, guys. Yeah, I just like to talk through the conditions because I think it helps me and it helps you guys understand the logic around why we're doing what we're doing, right? And so you got to understand if they were going to be breaking down, they would have broke down really fast. If they were going to be going up really fast, they would have gone up really fast. So the whole point is to understand what it's telling us. What it's telling us is that the market's indecided, right? And indecision is where everybody loses a lot of money. I don't lose a lot of money in indecision, right? And we will trade all through the morning. Yeah. Now, if they were doing this, if they were building this position like this at an like at an overbought position, then I'd be thinking we're dropping. But we're not overbought. We're not overbought. We're oversold. We are oversold still, and we will wait. I think they're going to flush one more time. Might even do some divergence for all I know. But I ain't getting into a trade unless alignment happens. And there's no alignment. No volume either. A couple things too, like I'll explain why I have the settings the way I do, right? You see this? Like you could put it to a larger sample, but then you don't get any trades. Like if I put it to that, you would see no overbought position, sold over position. So I believe in the settings. I've tested them a lot. I've traded them a lot. I've seen them a lot. You can do whatever you want to do, but conditions are just what they are. And that's why I use a 3 period, because a 3 period on the higher time frame gives me the information that I need, right? And truthfully, I think this is hidden divergence on a higher time frame, which should give us a really big trade. But that's a look at this, right? Look at those lows. So that's something that most of you may not know. How many of you guys have ever seen my trifecta events? I think there's a big move coming here. This is over. This is hidden divergence on a higher time frame, which just you just gotta let them place their orders and let the banks do what they need to do. Like, yeah, on the 3 minute, my settings are very clean. I don't have a lot of settings. I use this. Take a screenshot. These are my settings. You'll get my desktop. I have both momentum and trend trade and pullbacks on. I use an RSI period. I use a 3 bar volume look back with a 1 multiplier, which means it just needs to break the average volume. It doesn't need to be a 20% increase. You need to get it. You need to get it. If you're in the ATS or the AQS, you get the algo or the indicator. If you're not, you need to buy the software. I think they're building a position. They're going to sweep again. We might see a big push. We might not see it until after. How do you know? You don't. Sometimes it happens right off the open. Sometimes. Let's take a look at yesterday so you can understand the logic around what I'm doing. Okay. So yesterday, look, they made everybody wait yesterday. Let's just take a look at yesterday. Yesterday, look, like we sat there through one, two, three, four, five, six, 7 candles, 7 times 15. So they flushed off the open. I didn't trade it. I traded back in for an orb probe trade, which we'll talk about next week. They built this huge consolidation, and I waited for them to short that bad boy. And that's exactly what happened. They just took an hour building their orders, and then the trend kicked in. And look at these trades. This was a great trade here. What happened? Midpoint in a trending market, strong trend in the day, midpoint came into an oversold position. Look at that short here. It was a huge short. Now, these momentum trades, you can trade whatever you trade, but I like to trade in alignment. So this is when I didn't trade that, right? I didn't trade that, but that's the point. The point is that when you wait and you trust the power of your patience, the market's going to reward you with the best trade. Does that mean you can't take other trades? No. Does that mean you shouldn't try? You can do whatever you want, but I've just learned over time that I'd rather just not be in the market until it's the right time to be in the market. I'd rather be the sniper on the hill, man. After 9 years of going back and forth and making money and then having losses and over leveraging and then making it all back, and it's like, what type of emotional shit show do you want to live by as a trader? Now, one thing I will tell you is that as a swing trader, right? As somebody that you may want to swing trade, these trades are ridiculous. Like ridiculous. Like entering on the hourly and using the 4 hour chart, ridiculous. Now I just believe that they're just not ready to, they just don't have enough orders to go higher yet. I truly believe that. I believe that they do not have enough orders to go higher yet, right? So until that happens, look, and they're still inside that 15-minute orb. You know what I mean? But I definitely think we're definitely going up. It's just we got to let them finish what they got to do. And why do I think that? Because I can see the strength of the trend in the higher time frame. I can see the strength of the trend in the smaller time frame. We have alignment in trend, and therefore they need orders. And if the market doesn't go up quickly, it's because they're doing some big orders and they need to fill a lot of book. And that's that. It's not because they're wanting to stop you out or they want to make you weird or no, it's they need orders to go higher, a lot of orders. It needs to be based on fundamental decisions. So they need to flush orders, sweep stops, do whatever they need to do, and then eventually the buyers step in. Make sense? Now, even if we were on a 5 minute, you would not have clean trades. 5 minute is still in an uptrend. 5 minutes not in an uptrend. Look at, tell me that you got long and short and long, like that's not clean, right? So you wouldn't even have trades as a scalper right now with this system. You can't. So don't try to just tweak things when things aren't giving you the movement. Super, super important not to do that. Exactly. Why double or triple your workload if you don't need to? When in doubt, stay out. Why work your way out of losing instead of just waiting? Also, depth, liquidity, probes over the last 4 minutes, prices, order seeking. Exactly. It's in an accumulation phase. It just simply put, it needs to go down before it goes up. It needs to sweep liquidity. If it didn't go up right away, it's because there's still too much supply in here. The buyers need to eat that up. The supply needs to be, it might go higher, it might go lower, it might come in, it might even come down here for Christ's sake. We might, whoop, it might just do this. We don't know this. Nasdaq's done some things that I've seen like I didn't expect. One big spike bar and then boom, and you got to. I'm just patient, so I just go back to what I've done over the last month of testing: oversold, oversold, uptrend, uptrend. Wait for the buy volume to step in, and then take the trade. Buy volume will signal everything when you're in alignment. We don't have it yet. And if looking back, if I study all my trades, I should not have taken that trade. It was not oversold because the conditions were not in a strong trending market yet. Yes, we're in a trend, but we're not in a strong trending market. All the markets were going down at that time. So I like to study my losses. What did I do right? What did I do wrong? What can I do tomorrow? It's not a negative. It's actually growth. It's a negative if you know you broke a ton of rules and you do it all the time. Has the weakest market caught the bid yet? Nope. But all these markets are staying strong inside that orb. So I have a feeling Russell's going to sweep the Asian low because Russell's a beast, man. Russell's a widowmaker. It does what it does. It just does what it does. And I think the Russell will sweep lower. And then when the Russell's done puking, because it's the weakest market and it catches the bid and the buyers step in here, there's a chance for big, big movement. And then the other side of this, let me just explain the other side of this. The other side of this is that for whatever reason, buyers do not hold their ground. They accumulate for sells, and then it's a trend change to the downside, and we won't see big trends till later in the afternoon. You don't know that. Alignment will happen when it happens. I just go back to I don't take trades in the wrong locations for the wrong reasons. Exactly. Sitting in the woods behind the trees, sniper rifle loaded, laser. It's like calling a moose, right? It's like calling a moose. I used to hunt with my dad when I was a child, right? And we used to sit there and you call for days, days and days and days and days, and then all of a sudden, boom, you catch the big buck. Deer hunting's even harder. You got to be super quiet. I was always too fidgety in the stand. I would always move every 5 minutes. Couldn't catch a deer. My best friend was always the better deer hunter at the time. We will wait. YM is still sitting there probing. It's really interesting open. Are you guys learning from this? Are you guys learning from this? That's the important part. I need to make sure that you're getting value from this. We will do a lot more together. I promise you this. Now that this is built and it's ready, next week we're going to be doing and you see the pace coming in here. The pace is picking up a little bit. 8 o'clock. It's 11 o'clock now Eastern, which tells me that we might not see the push until after the European close. We don't know. Like I said, they might push lower, take more liquidity, but it's interesting, right? It's interesting what the volume tells the story of the accumulation. Look at this. The volume tells the story of the accumulation. Volume's dropping. If this was distribution, volume would be spiking crazy. Normally in an opening range 15 minute, like think about this. How many times have you seen an open where you got one, two, three, four, five, six candles still inside the opening range 15-minute bar? Not in a trending market. Normally in a range bound market, you'd see that, but this is a trending market, right? So there's a big story to be told about today. Big story. And I'm willing to wait. How many of you guys, Daniel says, the biggest thing I learned is how well you handled the loss. Thank you. I used to beat myself up, not as much now, but not as calm as you. You're exemplary. Well, because I believe in my data and I believe in what I've tested. I believe in just knowing what I've seen. And remember how I've told you everything is about alignment and conditions. So let's go back. Discipline and acceptance is not learned in the signal or the system. It's learned in the conditions. Okay. It's learned in the conditions. So let me explain what makes the best of the best traders. Yeah. Yeah. But I don't trade prop accounts, Daniel. Normally I'll trade cash accounts, like real money, right? So for me, um, it's all about understanding the condition and being willing to understand the weighting of the location, right? So for me, what I will do is I will share with you that on days like today, when the market doesn't give you the context or it doesn't give you the environment that you would be wanting, it works well with anything. I'm just saying for myself, Sarah. Sorry, like I don't trade prop accounts myself. I prefer to trade big size on a cash account for me, right? Because I'm looking to make big money on my trades, right? But that comes with time and experience and just comes with just 10,000 hours, right? Bruce Lee didn't do 20 things, he did one thing very, very well. So for me, when I read the comment that Daniel Benjamin just said about me, how I handled the loss, let me ask you a question. If you took a loss by yourself, you feel pressure. But if you took a loss in front of 150 students, is that not the same pressure as trading a live account? I'd say so. My job is to help you become great, right? So I need to be able to show you the discipline and then basically also show you the aggression. And I also need to show you that the highest probability trades are at overbought or oversold conditions. The Nasdaq was not oversold. I took a midpoint trade in an non-explosive market. That was a mistake. It was also an aggressive trade, but I didn't have any other follow through from the other markets. So we will wait until, right, these markets are ready to go higher and we will execute on those trades, right? But if all these markets dip lower, right, we had a pretty strong uptrend in the overnight session. You understand that? So if the uptrend gave a lot, look at the uptrend here on the follow through, right? So there was trades in the London session that really, really pushed, right? So you got to expect some consolidation. I would like to think that a lot of this sell off is the result of this taking profit to do this, which is acceptable. We have to be understanding of the rotation between the Asian, the London, the US session. But I just keep going back to sell volume is declining on every drop on the higher time frame. Sell volume is declining. So this is a pullback trade. This is not a momentum environment. Exactly, Frank. You know your stats, you look at your trade according to plan and get a loss. That makes a good trade. Right? Like I'll show you folders. I got some folders on my computer here. I'll just show it to you here. Like I just take folders. Like I just take trades. I just take pictures and pictures and pictures and trades. I trade it, and then I just take pictures and pictures and pictures and pictures and pictures every day. I just trade it, right? So for me, I've seen this before. Like I've seen this before. I've seen this game before. I've seen this play before. I know this play. This is them building big orders to move the market into a big direction. They can't move a big direction until accumulation. It's embedded, it's ingrained exactly. And let me explain something. I don't want to be perfect because then I believe that I'm God and I'm not God, right? So like if I'm going to be perfect, you can't ask God for help, right? So for me, I get right with myself every day. I come in, I accept the conditions, I pay attention. But what I've really learned is that you can do everything right and the market still does some crazy shit. So that's when you just say, hey, conditions make the best trader, not the system. And I think today is a great example of the hardest conditions. So if you can trade, if I can take the next trade out of this and do well with it, make my money back in the worst conditions, guess what? In the best conditions, we throttle that. That's why I want to do more training sessions with you. I don't think you guys are going to learn everything that I can do with this in one day. And I really, really want to do this with you guys for a couple days. Why? I just like trading with you guys, right? Yeah, I will. I promise I will. It's a great example of smaller time frame is in a downtrend, higher time frame is in an uptrend. Markets are not in alignment. Smaller. Okay, so here's some alignment. Interesting. Okay. So YM just crossed down, breaking down out of this orb. Okay. A couple things I want to pay attention to. YM correlations lower. We're pushing lower off the open. We just broke down. Those EMAs are everything to me. I pay attention to those EMAs because on a 15-minute chart, for those EMAs to cross takes a lot. So what that tells me is the YM is proving to be quite weak right now. And that will give me an opportunity to short this market. So this is why I trade the market that tells me what to trade. Russell's still in an uptrend, right? Alignment is down, so we're not. But this is important, right? The YM is trading lower. It just crossed back down into a downtrend, right? Which means we're taking out the lows, EMAs are getting lower. What that means though is I must wait for this to get back up here. So I have waiting to do. I have to wait for it to get back up here. As long as the smaller time frame is in alignment, then I will take the short. Does this make sense? It's not easy waiting. And I told you that yesterday. No, but you're gonna have to struggle. You're gonna have a hard time changing the mindset. It's no different than changing your diet, going to the gym when you're tired, getting up to work when you want to put food on the table for your family after you're exhausted for the week. Whatever is your story. I mean, I'm just here to tell you that it will be what makes you the most amount of money and it saves you from losing a lot. What's the last column color signals for? What do you mean? This one on the right hand side? This, Maureen? Yeah, that's correlation. So that's percentage change correlation off the open. So that tells me the strength and the weakness of the markets, of these markets. Okay. So off the open, look at how messy that is. That's not alignment. That's not healthy conditions, right? That's healthy conditions. That's what we want for throttling follow through, right? And that's not what we have right now. So when you understand your environment, right, you don't go to the basketball court with skates on. So right now I'm waiting. And like I said, they might want to push lower before they go higher. And if these markets cross down, right, if the trend rolls over on the S&P and the Nasdaq, we get a lot of selling, could be a big downtrend in the afternoon. We don't know this. Michael says your teachings are easy to understand and retain. Your webinars are always full of wisdom. Okay, Amara says, you wait for alignment with your time frames. Do you confirm good risk reward before entering? Let's say you're right, but there's a big support in front of you. I just trade the signal and the alignment because the moment you start trying to add this and add that and this and that, you need too much things to align and you talk yourself. Yeah, 15-minute charts, I feel like I'm vacation relaxed. As a day trader, 15-minute charts feels like I'm a swing trader, to be honest with you, because I'm naturally a scalper. I like action. I'm aggressive. I like to, and that never makes me a lot of money. Like after really assessing myself, just because you can identify with something that you do normally doesn't mean it's the best thing for you, right? Like, so for me, I just realized that I'm better at just learning patience and implementing patience than being aggressive. Look at this. Russell's catching the bid. That's what we wanted. I've been saying this all morning. Russell's catching the bid. Finally. Sky says, action's been my sugar, but it loses me a lot of money. Yep, exactly. And you got to remember, like, think about the London session. This might be sellers. This might be all the sellers in the London session exiting their positions from the big trend. I highly believe that. Then the US session kicks in and starts trading higher. You got to remember, London traders rode that long all the way up. They traded that long all the way up. London traders need to take their profit before the market closes. So once those orders shut down, that's where you normally get a pop. Sharpshooter's absolutely right. Sets the alerts and the big move for the upside. We will see. We will see. Time will tell, and the indicators will tell. You got to remember, like every time we get into oversold positions in an uptrend on the big picture, higher highs, higher lows. It's hard to wait. Can I ask an honest question? How many of you are struggling right now waiting? If it wasn't for me talking, you'd probably be in a trade, right? Yes. Dan's like, I can't do it, man. Yes. How many? Isn't it effing crazy? Isn't it crazy how we are so ingrained on doing things we shouldn't be doing? That's why everybody needs a coach. Everybody needs a teacher. Jeff says, I'm just sipping. I broke up my Bob Ross coins. Yep. But I do believe that there's potential here for change. We just got to wait. Take a look at the 5 minute. I just want to see if the 5 minute trend shifted yet. Nope. That's my answer. 5 minute shifted on the S&P though, and that's a little bit interesting. I just don't think there's alignment here. Russell's on the 5 minute. Russell's on the and the YM's on the 5 minute. So there might be a rotation down for the day trade scalps. So let's talk about this for a second. Okay, let's talk about this for a second. So if we look at the S&P 5 minute, just crossed over. Okay. S&P 5 minute just crossed over, which means if this starts to go into a big downtrend, it'll happen on the 5 minute and the 1 minute before it happens on the 15 and the 3. But I'm a big believer in the bigger picture always wins in terms of time. So, yes, you might get a trend happen as a scalper, but do you really want to be trading this many trades? Look how many trades there are on the YM. The YM shifted lower here on the 5 minute. So, as a scalper, let me explain this. As a scalper, there was absolutely a lot of trades on the YM because this was the only alignment. So let me explain this, right? The YM came in here. Take a look at this. This is once you get better. Once you get better, please don't just start switching time frames. I don't really know if I wanted to do this, but I'm doing it to show you what I'm looking for. Okay, I'm gonna grab a box. Higher time frame, 5 minute, 5 minute. Okay, let's go down to the 1 minute. Look at the short that came here. So this spike down came up, but the short was here. Close was there. Stop is here. It did give a big trade. It's just I'm not scalping. So you can't get mad at yourself because it happened on a different time frame or a different market. That system gave follow through on the trade here and the trade here. Actually, the trade happened here, to be honest with you, right here. So you would have taken all your profits on that spike down, but you would have had to been on the scalp time frame. We're not on the scalp time frame. We're on the day trade time frame, right? So just picking your poison is important. And I still believe that you should start on a higher rotation. Like I believe that you need to learn it, you need to accept it, you need to get good at the rotations and the indicators so that you don't just start giving away all your profits. Make sense? I'm just so surprised that even on a CPI day that we have had no movement. Like it's just bizarro to me. It's just crazy. I'm interested in seeing what happens off the European close. Yeah, the VIX and the dollar index, absolutely it does. Uh, I'm here to tell you major movement hasn't happened all day. Like the major movement of that news is here. Look at this. And we're inside of it. We're inside of that news candle. So movement hasn't happened. Like nothing's happened. How can you trade anything if the market's not even moving? It's not even moving. So I just take it as it is. Yeah, I just take it as it is and I wait and I hunt like a sniper and I wait for the big kill and I execute. And if I get the signal on a couple markets simultaneously, I will trade them simultaneously. Does that increase the risk? Yes. But if I believe in the system and they're all going to hit targets, that it also increases my reward. But I have to believe in the strategy before you take two or three trades simultaneously in correlated markets. The YM traded lower. This is interesting. The YM, the stronger market, has been stronger since the open. It was the weakest market all afternoon or all evening, but it's been the strongest market off the open. And that's still shifted down. So we will wait until the YM decides to go oversold or overbought, excuse me, up here. And then I will wait for it to come back up here. And then I will wait to short it. Right. And that's just the way I just wait for alignment. I just wait for alignment. Yeah, the London close is going to be an interesting decision. I mean, it's we will see. Remember what I said about the S&P when we got here? Remember what I said is that when the S&P is overbought, it normally drops. It dropped, didn't it? Do not ignore the oscillators in trade movement. They don't necessarily need to be the reason where you enter. The volume triggers on the HAT system are why we enter, but don't ignore the oscillators. And that's why I use them. I use them for decision making as to where I take these HAT volume trades because HAT volume trades are going to execute everywhere because volume and Heikin-Ashi patterns happen. I'm about teaching you where to take the entries and how to take those entries and why to take those entries. Given today's conditions, given today's conditions, I have no choice but to set up multiple sessions to show you guys this stuff because this is not this is not fair to anybody. It's not fair to anybody, right? So you can show up and do all the right things, but if God says wait, not the time, yeah, volatility will stir. Mhm. Mhm. I just like to look at all three big picture time frames, right? You can't deny this. You can't deny this. You can't deny this. You can't. Not when all three of these are still in a strong uptrend. It'd be different if they were crossing over, but the YM is the only one that's crossed over, right? So if I look at the YM, yes, the YM's crossed over, but the other three have not. So I can't ignore that. And it's when you have three markets, one, two, three, that still have strong trend environments, that still show strength and they're oversold. Either these markets are going to just start to tank and then they all roll over, or they're going to catch a bid. And the likelihood of catching a bid is better because the oscillators show me that, right? But that doesn't mean that they got enough orders to go higher yet. Patience, which is hard. Sky says, I wonder how many of us would have been chopped up so bad today on the smaller time frames. Well, ask the audience. How many of you guys think that you guys, if you weren't here today listening to me talking, you would have taken a whole bunch more trades in the market conditions that we were in? Yes or no? How many of you guys think you would have broken more rules or you would have made a bunch of emotional decisions or went this way and went that way? Not everybody, but how many of you guys? Sadly, yes, Brian says. Pete says yes. The algo is different. Dale, I would have the algo off. I would turn the algo on when alignment kicks in. So Marcus says yes. Michael says yes. Thank you for your honesty. A lot of traders would feel they would be emotionally trading, right? Well, this is one style, Marine, right? This is a preferred style. It's allowed me the discipline to get up in the morning, not stress in the morning. I don't take or breakouts for the wrong reasons. I don't trade rotations for the wrong reasons, right? All of this has allowed me to be patient. Richard said you would have got wrecked. Well, I think that's just as good as taking trades, not taking the bad ones. Hmm. This will be interesting. That the first 15-minute candle changes on the weakest market. I still think they're waiting for the European close to happen until they start doing some things. I want to show you something on TradingView while we're waiting. Manually, of course, because this is the HATT system with the volume. Okay. So let me show you this. Let's go to the hourly and let's go to the 15-minute. Interesting. Okay. So look here, right? And this is something that we try to align ourselves with, right? Like look at the trend. Okay. So when the trend is up, like all trends are up. So there it is, right? So from here to here, right? And this is what from a swing trading perspective, obviously, I'm going to show you some stuff here, right? Go to the NASDAQ for a second. Take a look at this, right? You've got trend happened here and it went all the way up and it's been in an uptrend, still in an uptrend technically, right? But if all I do, okay, if all I do when the time frames are in alignment, they're both in alignment here. All of them. They never cross down. They're all in alignment. Okay. So this is important because I'm going to show you why I do this on a day trading time frame. I just wait for the alignment. Let me show you something. Just going to draw boxes here oversold on the big picture. Okay. Here it is again. Oversold on the big picture. Then here, oversold. Second here. Here it is again, oversold. Here it was again, oversold, then oversold, then oversold, then oversold again in an uptrend. Okay. So all of those times, that's a swing trade time frame. So I'm just showing you what we're doing as a day trader, which will happen. So look at every single time, right? We did not get any volume spikes in any of these candles until here on that bar, right? So this isn't actually, that's not true. If you look at the volume here, there was a volume spike above the average here on this candle. You got to really look at that's why we use the HATT right here. That was the volume spike. It broke the average on that candle. You wouldn't see it unless you had the algo or the indicator. So that was the trigger on that candle, right? So when you look at that, so let's just draw a line here. So we'll just draw the box. So that was the trade right there on the swing trade. It's a big movement. Okay, let's take a look at this one right here. That was market open. Oversold on the hourly, market open, first 15-minute candle. Why do you think the opening range breakouts work? Because the hourly's kicking in. This is what a lot of traders don't understand. It's the time frame alignment that gives you the orb breakouts that you guys don't even realize you're looking at. Breaks the average here on that candle, first 15-minute bar. This is an hourly oversold condition. There's your swing trades, but you don't realize that you could be trading this as a day trader if you align your time frames right. There's your trade right on this candle right here. That's your trade. That's an hourly chart breakdown. Okay. So when you look at all those and you look at all those environments and you look at just the settings, right? And you look over here, okay? Take a look. There's no volume here, right? You can see there's no volume here. Like you get an oversold position here in the hourly, but there's no volume. You get an oversold position here in the hourly. There's volume here, right? And that's the difference between, right? Look at, there's your trade on this bar right here as a swing trader. Now, this is what we're doing as a day trader, but I just want to show you the exact same logic applies to any time frame. So there was no volume here. So there's your entry right here on this candle, right? And there's your entry. Stop goes here. As a swing trader, you make a shitload of money. Less noise. You wait for the triggers, right? Here's another example, right? Oversold position. Where's the volume? Did it come in here? Let's see. Oversold. First candle to give the volume. Right there. Stop goes here. Big trades. London closes in play. Look at the bid catching here. We're going to wait. These indices really, really, really just want to sit. Guys, if I could wave my crystal wand and move the market volatility, volume is always the trigger. Volume is the reason I get into the trades. The Heikin-Ashi volume pattern is the only reason I get into the trades. Make a call. Yeah. So these three markets are just sitting like a very quiet nothing. Okay. So when that happens, guys, you accept the condition. Okay. Now there's no trade here because our EMAs are not aligned, right? We're going against trend. We're not in a trending environment right now. We are not in alignment between the time frames. And so this is the lesson that I will teach as a day trader. When you, well, because the 30 goes into the five, Stephen, I use a 30-minute and a 5-minute rotation. So if I was trading on a 5-minute chart, I would use a 30-minute higher time frame. Make sense? NASDAQ EMAs just crossed over, which tells me these markets are just very, very messy. I still think they might run stops. I still think they might run stops here. And they might flush down and then go back up. When I'm seeing the Russell catch a bid off that close of the European session, I see that. I see that all these markets have just stayed there. Now, there's also a chance that these markets can just drop all the way down. And I can't control that, right? And we just wait again. But one thing I do know is we're going to have a few more sessions on this because I think you guys need to see different conditions. If the Russell, right, becomes the strongest market again, right, and it goes back up here and it crosses up and we get alignment and all that stuff is happening. But you got to remember this bid right here, think about this, made a lower low. If this comes up here and makes a lower high and then drops, this could pull these other markets lower. And I think this could very well be a rotation where we're just having to wait for these markets to rotate. We will see. We will see. As a 5 and a 1 minute trader, right? Take a look at this. NASDAQ, S&P has crossed down. Okay. So as a scalper, this is for you scalpers in here, right? S&P's crossed down. Let's take a look here for a second. Russell's crossed down on the 5. YM's crossed down. So then there's scalp trades to be had here. There's scalp trades to be had. Take a look at this. This is a scalp trade. I'm going to show you the scalps. You can choose how you want to trade it. Look, we're overbought, crossed over. Okay. So if you look at this, if we can rotate back down, there's a trade here for a short. If we look at the YM, okay, YM hasn't been overbought yet on a scalp. We're getting close, right? So when the YM gets back up here, we'll wait. We're not ready yet. S&P, S&P's not oversold yet, overbought. So these are things that if you're a scalper, you would wait for the alignment. Make sense? NASDAQ, if the NASDAQ crosses over on the 5 minute and it drops down, then all of the scalp time frames are in play, which means we would be more patient for the day trades. And that's just the way it has to be in rotation days, right? Like this is not a strong trending day or a momentum day. What did you guys learn today? Type it in the chat box. I want to know what you learned today with this class. Patience. Okay. What else did you guys learn? Wait for alignment, patience and higher time frame alignment. No skates when playing baseball. Love the new time alignments. Conditions. Yes. How many of you guys feel like Superman when the markets are all moving in one direction? It's easy to just take a trade and it just goes in your direction. Exactly. And then the next day it doesn't do that and you get smoked and you start doubting yourself, right? These are the days. These are the days. Okay, let me explain this. These are the days that make you the best trader. Okay, these are the days that make you the best trader. Okay. How many of you guys think that you could trade the five and the one knowing the rules? Truly, with your experience. I know I said start as a day trader, but how many of you guys think you could trade the five and a one? Meaning you would wait. I'll give you an example, right? Yeah, let's take a look at the NASDAQ for a second. What's the NASDAQ higher time frame? Based on, I give it a try, Nick. Okay, so I get there's the aggressive traders in here. Some of you know. Okay, so let's take a look at this. Let's just assess the 5 minute for a second. NASDAQ 5 minute trend was up, correct? Higher time frame, 5 minute is up, correct? So let's just draw these. This was oversold, oversold on the 5 minute, oversold on the 5 minute, right? So by nature, those three areas where we'd be looking for trades. Okay, so let's go to the 1 minute. Okay, let me ask you a question, right? You see this here? EMAs were crossed over, right? No trade. You can't trade here when the EMAs are crossed over, right? Then they cross up. You get a trade here, right? Stop out. Okay. Then basically they come in here again, right? EMA's crossed over, get a trade, stop out. Okay. So that's two stops, right? You get a trade here, stop out. Do you think that this time frame is the answer, or do you think it's the conditions that's the answer? You understand that? On a strong trending day, the 1 minute and the 5 minutes, your hero, you're like, wow, wow, this is great, 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 great. Its conditions are going to crush you. So I would rather be super patient here. And on the days where the alignment kicks in and I get two, three trades in a row, okay, that's critically good, right? That's super good. So I would rather wait and I would rather trade. I would rather trade on the three and the five or the three and the 15 and just accept today for what it is. It's a shitty open. You understand that? In all of my years of life, I used to get upset when I wouldn't go in and just pull a lot of money out of the market, right? But let me ask you a question, right? If all of a sudden Thursday, Friday, Monday, Tuesday, Wednesday, the next 5 days, we get a lot of movement, right? We get a lot of follow through, then yeah, like you're going to have it. Now, I think the YM is the best market for trading right now to the downside. Heikin crossed over 15 minute. They're breaking below that orb. Okay. We are not in an overbought position yet. So you got to wait. But this market's showing weakness. So if this market shows weakness and all of the others start to roll over, right? Well, then we know the answer. The trend is over. And then you would trade to the downside. But we still have a long way to go to the downside. I just still think I still think like I just see the declining volume. You know what I mean? How many of you guys have seen the morning shit in the afternoon just totally go into a trend? I have. Just sometimes it's about timing, alignment. It is what it is. So they're flushing down, breaking down. Look at the YM. It's been messy, messy, big sweep, messy, big sweep, messy. These markets, this is all a consolidation on like a daily time frame, right? If you look at the daily, just grab this for a second. There's a big move coming on the big, big, big time frames. When you see this, something major, major is brewing on the big time frames. And this happens not a lot. So let me show you this. Take a look at the NQ. Let's just look at the daily for a second. Let's go to the 4 hour for a second. Let's see it. It's not enough. I want to show you something. We're gonna go. There's some big money moving. Yep. Look at that. Look at that consolidation on the daily. You see it? Look at this on the YM. 1, 2, 3. Consolidation. You see this? Like it's a big, big move that's coming. So when anybody sees multiple days of craziness, of oscillation, really, really nuts movement, it's because there's a big transfer of wealth, like you said, sharpshooter, that's about to happen. And then all of a sudden we break into trending day, trending day, trending day, trending day. You got to understand the dynamics of what's happening, and you won't really understand until you're in it for a couple days, right? Until you're in it and you start to see, wow, okay, like, you know, it's not always ideal, right? Like it's not always ideal. And so I hope that my wisdom over the last 9 to 10 years has allowed me to teach you some discipline in what we're doing so that you guys can stay out of really garbage conditions. You can buy all the software in the world and you can buy all the systems and have all the mentors and all, but it's never going to replace your ability to assess shitty versus good trading conditions. And if you follow my golden rules, we wouldn't even have had a trade. You would not even have had a trade. This midpoint trade was a bit silly for me. We were not strong trending all up to the upside. So learn from that. Don't trade midpoints. We're going to write that down. Some wisdom there. Only trade a midpoint. It's just that simple. Makes sense? Now, because of the conditions, I'm going to tell my team we're going to set up some sessions. Is Jeffrey gone tomorrow? Do we know this person? Is Jeff gone tomorrow? Yes, Jeff's gone tomorrow. Would you guys like to do another session with me tomorrow? Yes? Okay. Give me a second. Give me a second. So I just sent that over to Ashley. She'll set that up. We will run another class tomorrow so that we can assess it. Makes sense. So as a hat trader, as a scalper, right? If I look at the NASDAQ hasn't crossed over, S&P has. I don't have a trade yet. I do, however, have a trade on the YM coming up. So the YM is, it's not quite there yet. But if the YM were to come up and come into this and be oversold and then ultimately come and be overbought here and overbought on both positions, then I would have a short here on the scalp, right? All of these, see all these? This is why everybody should not just scalp the one time frame. None of these tell me that I'm at a right position. That's this. So this is why I really believe in what I'm teaching you is that when you look at this, all of those gave short signals on the 1 minute for momentum trades. But where are we on the 5 minute? We are not in an oversold position or overbought position. So there's no higher time frame alignment that's going to push those down for a scalp. Yeah, I can share the layout. I'll send it out tomorrow. I just never seen a trading session so messy in my life. Jeez Louise. I'm actually quite happy that we didn't take a bunch of trades, to be honest with you. I'm not sure if there's notifications. Good to see it tough. Yeah, it's good to see it though, right? It's good to see that. Yeah, I agree. It's good to see that. Some people don't agree with that, but take a look at that. 5 minutes oversold. Look, we're going to get a momentum trade here when this crosses down if the volume shifts. If the Russell drops down here, look at this. If the Russell drops on the 5 minute, that's a 5 minute. It has to drop down if it's going to. 5 minutes overbought. If it drops down on the on this and this drops down here and these EMAs cross, you're going to get a momentum trade here on the 5 and the 1. So as a scalper, right, I'm just letting you know that it's a scalping time frame. So, but it's really does the Algo 100 connection like this better? Well, the reason I'm teaching you all these filters is so you can turn the algo on and off, Michael. The algo is going to take the signal based on HATT and the EMAs. So you won't have to worry about looking at the EMAs alignment. The algo will go on and off, right? So as long as you have the EMAs set up the way I do, and I know Berzin and the guys have it set up the way that we're talking, if these EMAs crossed over, the HATT would execute. But if you were not in the right place, you wouldn't turn it on, right? I'm still a big believer of this, and I'm going to stick to what I do best. I'm a 3 and a 15-minute trader, and I trade what I always trade. And so I'm going to just follow my rules and wait for that and, you know, stick to it. Yeah, it is profitable, and that's just takes time, right? It just takes time. Can't make money when the market's not moving. Market's not moving. So no money. And when I ran the back tests, let's just go back. You guys want to see something? So let's just go here. So desktops, recent desktop, had algo. I want to show you something so you guys can understand what we're dealing with today. So look at all the testing I've done. I've done so much testing. This is probe and rotation year to date. So I'm going to just leave it the way that I had it set up for that. Watch this. I want to show you something. This is 3 minute tests, okay? So let's just go here for a second. Is every day green? Nope. Is there days where we don't have trades? Yep. Lots of them. That's not all weekends. Let's take a look at it. How many days we don't have trades? Look at that. But what does that tell you? That's not a small number. Yeah. You must get good at acceptance. That's the hard part. Acceptance, right? And that's the most important thing I can teach you today. And hopefully you guys accept this as not a negative lesson where we didn't just take a bunch of trades and make a bunch of money. I think the biggest lessons are learned in the hardest conditions where the discipline has forced us to be the best. What do you think? What's your thoughts on that? Let's take a look at the hat 5 minute. I want to say, I think, because the 15 minutes overbought and oversold here. It's interesting. Like this is a 5 minute and the 15 minute is also overbought. So I think there might be a drop here on the Russell. Like, let me show you an example of what I mean. Okay, so look at this. I've got and that's why I like to keep them both, right? So take a look here. So yes, we're in an uptrend, but we're also overbought here now. So this made a lower low and we're now overbought. So, and with the weakness coming in on these indices, I look for patterns. So what I'll do is I will come in and I will take a look here. And maybe this won't drop and maybe it will, but I still watch what's happening. Doesn't mean I'm going to take a trade, but take a look. So this is now at a 5 minute overbought, right? So 5 minute and 15 are overbought. But this is where traders get all messed up, right? And like, do you see where we're going with this chaos? Okay, I'm looking at the 5 minute, then the 3 minute, then the 1 minute, and the fucking 5 minute, and the 1 minute, and the 2 minute. It's just garbage. It's just nuts. You need to define yourself. You must define yourself. You either trade on the 5 and the 1, or you trade on the 3 and the 15. Done. Case point. You do not flip flop. You do not go back and forth. You pick and choose your poison and you stay there. Why? Because you will start telling yourself a bunch of things and start doing a bunch of things and start overthinking and over trading. And don't do that. I gave you the time frames. I gave you the rotations. Choose what you do. Are you scalping? Are you day trading? Are you intraday swing? Are you swing? Period. Right? Pick your style and stay there and accept every single day as the day gives it to you. Remember how many times I do a webinar, I say the hardest part about trading is that every single day is different. I had trades yesterday. I didn't have good trades today. Maybe I'll get great trades tomorrow, right? We don't know this. You got to accept that, right? You got to accept that, right? And that's what I'm trying to share with you. That's what I'm trying to share with you. So I sent a message to my team, and my team is going to set up another webinar for tomorrow. They're going to give you an email and a Zoom and all that fun stuff. And I'll see you again tomorrow morning. Make sure that I can do that. Make sure I'm not speaking out of turn here. Yeah, I'll be able to do that. I'll just have to get them to kick that meeting out later. Perfect. Fantastic. Yeah, and you don't know here. This is consolidation or distribution. One of the two. It's either going to drop or it's going to give you a push to the upside. And take a look at what happened on the Russell, right? Take a look at what happened to the Russell. The oversold kicked in, but no volume coming in here, right? No volume coming in here. So this is what I mean by if these go back up, though. Look at this. If this starts trading back up, well, we might go forward, right? We might see the move in the afternoon, or we might not see anything today. Tanya says I'm a good teacher. Does everybody else agree that I should be teaching you guys some things? I'm not here to ask for praise. I'm just here to pair my experience with you and give you some wisdom, and hopefully through my time with you, I can help change some of the course of how you develop as a trader and grow. And Jeff and the guys, Burzin and Jeffrey and Jeff, back end Jeff, and everybody that's working with us is there. Everybody's great. Got such a great team. Tom says, I like when you do these. Yeah, I'm going to do more of them, right? I've been working on a bunch of big projects with the company, but we're going to do a lot more of them. Yeah, perfect, guys. All right. Well, listen, it's not the right time to be trading. We're going into lunchtime now. Volume will drop drastically. And yes, Kraken does sell prop accounts for crypto. Yes, they do. Yes, they do. ES as well. Maybe on perpetuals. Yeah. Maybe it's because they own Ninja Traders, so they're trying to do their own big thing, right? That actually worries me a little bit, right? You see all these prop firms that are working with Ninja Trader and that they're all on Ninja Trader, and you gotta remember like a Kraken owns Ninja Trader. And like one day I just see a world where Ninja Trader just shuts everybody off and just becomes the biggest prop in the industry. Who knows? Right. And then shuts everybody down. Like Alpha Futures is suing Ninja Trader right now because of what happened. Like, I don't know, like you got Tradeify building their own platform. You got My Funded Futures building their own platform. The space is changing a bit. And it's the Wild West. Prop firms are the Wild West, right? But yeah, I live here, Tom. Yeah, I'm not here on vacation. Yeah, great. Well, guys, God bless. Have a fantastic afternoon. I apologize. The conditions were shit. I can't change that. But what I can tell you is I hopefully taught you a lot of stuff what to do on really, really bad days. And when the good days come, we're going to throttle them. So hopefully tomorrow we get some movement.